Well, good afternoon. Thanks, everybody. Welcome to the next session. What will unlock the next wave of growth in China? My name is Rick New. I'm the founder and CEO of Nexus Worldwide. Sitting next to me is Bonnie Chan, who's the CEO of Hong Kong Exchange. Mei Gao, IDG Global Partner. Andrew He, founder and CIO of Nels Capital. Mr. Nicholas Ho, who's going to give us a keynote speech momentarily, is the Commissioner of Belt and Road for the Hong Kong government. And Jun Sun Park, who's a co-CIO of Legend Capital. Without further ado, Nicholas, the floor is yours.
Thank you. Good afternoon, everyone. Distinguished guests, it's a real pleasure to be here at FII panel today and share my observations and aspirations for the next wave of growth in China. When we discuss growth, we must differentiate between cyclical and structural growth. Cyclical growth is influenced by transient factors such as prevailing sentiments, interest rate fluctuations, fiscal stimulus, so on. In contrast, structural growth stems from the sustained and optimal utilization of an economy's inherent endowments. This is where policymakers must focus their attention. So today, I'll emphasize on the critical factors that will unlock the next wave of structural growth in China. Over the past several decades, China has achieved extraordinary economic transformation since its opening up in 1979. This has been driven by active engagement in the global value chain, leveraging its abundant labor supply and rising productivity of its workforce, what we called as the demographic dividend. There are growing challenges regarding the sustainability of this model. First, companies worldwide are diversifying their supply chains. Second, the cost of production within China is rising. It is a challenge to continue with the low-cost production model, and the declining birth rate also put pressure on the labor supply. Third, the technology gap between China and the rest of the world is narrowing rapidly. That said, while China's demographic dividend may be reducing, there's no cause for alarm. In fact, quite the opposite. Foreign direct investment remains extremely robust. According to UNCTAD World Investment Report in 2024, China was the world's second largest recipient of FDI inflows, attracting 160 billion in 2023 for the third consecutive year. Moreover, it was the third largest source of outward FDI inflows, with $140 billion in 2023, maintaining top 3 position for 12 consecutive years. This demonstrates that China continues to play a significant role in global value chain. Furthermore, China's population remains huge. The nation is also making significant strides in robotics, with many labor-intensive tasks now being handled by advanced automation. Crucially, China is pivoting its focus. Rather than primarily relying on imported foreign technology and basic labor, China is embracing the concept of high-quality development. This approach prioritizes innovation as the driving force behind growth, emphasizing that future development must be coordinated, green, open, and inclusive. Addressing today's topic, the next wave of growth in China will be propelled by high-quality development, particularly through green initiatives and innovation. On green development, China has emerged as the world's largest clean energy investor. According to IEA estimates for 2024, China will invest a staggering $826 billion in clean energy, contributing to 1/5 of China's GDP growth. In contrast, the US and EU ranked as the second and third largest clean energy investor, with $497 billion and $446 billion respectively. This means China's investment represents 88% of the combined efforts of US and EU. Through forward-thinking green investments, we can reduce the cost associated with environmental degradation, fostering sustainable growth and development. As the benefits of these investments materialized, improved worker health, lowered healthcare costs, and enhanced energy efficiency, the next wave of growth will undoubtedly be unlocked. When we discuss innovation-driven growth, we must acknowledge that while quantifying innovation can be complex, the impact is undeniable. Consider two distinct types of innovation-driven growth. The first is a type of businesses that simply did not exist before. A global drone industry leader was founded in 2006. Prior to this inception, the drone market was virtually non-existent. Fast forward to 2023, and the low-altitude economy in China was valued at a staggering $70 billion, marking a remarkable 34% increase year on year. This sector is not only just beginning to soar, having grown 30% compared to the previous year. In less than 2 decades, China has catalyzed the emergence of entire industry from the ground up. The second type of innovation-driven growth is the industries where China is now breaking grounds on. The innovative drug sector is a prime example. Historically, China's strength lay in drug manufacturing, but in recent years, the innovative drugs industry has experienced explosive growth. In 2023, the market for innovative drugs reached $100 billion, and this figure could even be larger if we account for out-licensing abroad. There are countless examples, from nuclear technology to batteries, underscoring this transformative model. In the context of high-quality development, Hong Kong stands out as a super connector and a super value adder. Regarding green development, Hong Kong possesses a comprehensive value chain that integrates green standards, finance, and technology, all interconnected with mainland of China and the rest of the world. In May this year, Hong Kong introduced the Hong Kong Taxonomy for Sustainable Finance, providing a clear framework that aligns with the Common Ground Taxonomy, China's Green Bond Endorsed Projects Catalog, and the European Union's Taxonomy for Sustainable Activities. This framework encompasses 12 economic activities across 4 sectors: power generation, transportation, construction, water, and waste management. According to IEA statistics, power generation accounts for 48% of carbon emissions in mainland, followed by industry at 36%, transport at 8%, and buildings at 5%. With the introduction of the Hong Kong taxonomy, we addressed over 60% of the mainland's carbon emissions. Not only does Hong Kong feature globally competitive green standards, but these standards are also inherently linked to green finance. Standards interoperability and alignment drives global public and private investments, which in turn propel economic development and integration. The HKSAR government's initiative to promote sustainable finance has resulted in significant market growth, with green and sustainable debt issuance in Hong Kong exceeding $50 billion in 2023. Notably, Hong Kong ranked first in Asia for the volume of green and sustainable bonds issuance, making up 37% of the total. Today, as we stand here at this important moment in time, when the global landscape is continuously in flux, one thing is clear: we must innovate. This is where Hong Kong plays a pivotal role, serving as a powerhouse of innovation. Take the drone industry leader, for example. As I mentioned earlier, its founder graduated from the University of Science and Technology in Hong Kong. According to the 2025 QS World University Ranking, 5 Hong Kong universities ranked among the world's top 100, with the University of Hong Kong standing at 17th. This makes Hong Kong the city with the highest concentration of top-tier universities globally. Additionally, renowned research institutions such as the Karolinska Institute, which oversees the Nobel Prize in Physiology or Medicine, have established research centers in Hong Kong, with 16 states' key laboratories and 29 Inno-Hong Kong centers, collaborative research initiatives linking Hong Kong's universities with world-class institutions. This concentration of expertise have the potential to drive transformation and commercialize research outcomes across the globe. Hong Kong's contribution to high-quality development is immense. According to the Economic Freedom of the World Report 2027, published by the Fraser Institute just 2 weeks ago, Hong Kong ranks as the #1 world's freest economy among 165 economies. In closing, although we find ourselves amid a magnitude of challenges, global conflicts, economic challenges, and climate change, Hong Kong stands out, if you will, as the golden key in unlocking the next wave of regional growth in China, along the Belt and Road, and beyond. I firmly believe that cooperation is the only viable solution. Forums like today's exemplify this collaborative spirit, bringing together diverse cultures for a shared mission, shaping a positive, collective future. Only through working together can we unlock the full potential of the opportunities that lies ahead. Thank you very much.
Thank you, Nicholas. Great opening about Hong Kong, about China as part of the Belt and Road efforts. As all of you know, there's a special relationship being formed between the great territory of Hong Kong and this great nation, the Kingdom of Saudi Arabia. Let's move on to the next segment of the Q&A. I have this lineup of wonderful key opinion leaders here. Bonnie, let me start with you.
Sure.
Speaking of the outside perspectives about China, I noted recently the International Monetary Fund actually adjusted China's GDP growth forecast for this year. Now, part of the background is that many of the developed economies actually are trending down with all of their macroeconomic issues here. So why do you think the IMF actually took this move? And with that big picture in mind, what are some of the long-term great potential investment opportunities for the global community?
Okay. Well, first of all, I don't think I can speak on behalf of IMF. I don't understand the methodology. But suffice to say, because I spend so much time traveling around mainland China, you can see the growth. You can see it, quite easily. And I would say that, mainland China is still where you'll find the second biggest clusters of unicorns. And one area, I know we're short of time, right, that I think everyone should really focus on, it's green transitioning. Now, I know there's a lot of debate about overcapacity. China's leading in the space of EVs, solar panels, batteries, etc. And the technology is very advanced. However, if we think about, or if we really think about the question of whether or not there's overcapacity, I will tell you this. If you set aside, those EVs which are consumed within China, China's supply to the world, the rest of the world, it's only a single-digit percentage of total world's consumption of EV these days. So my question to the audience is, if all the countries around the world are serious about achieving net zero carbon emission by 2050, 2060, how are they going to do that? Okay? I suggest that the solution could be found in mainland China, could be found in the space like EV solar panels, and that is an area I think we should continue to see a lot of growth coming out.
Thank you, Bonnie. May, you live in New York, but let me ask you a question from within China. China's leadership has highlighted a shift towards something called new quality productive force as really a cornerstone of economic strategy and frankly new agenda going forward. What exactly does that term mean? And what are the key challenges, opportunities you see associated with this new quality productive force?
Thank you, Rick. That's really a great question. And I think it really ties into the theme of this conference, Infinite Horizons, investing today and shaping tomorrow. China is transitioning from a fixed investment-led growth model into an innovation consumption-led economy. And as Bonnie and Nicolas mentioned, it really opens up exciting investment opportunities for impactful, sustainable future. And we're already seeing some of those already. Nicolas mentioned that China invested over 800 billion in green energy transition, and it really helps to lower the cost of renewable energy for the world. Yeah, so we at IDG, we're one of the earliest investors in the green energy sector. And over the years, we have invested over $1.5 billion in the sector. And collectively, these investments have lowered carbon emission by 15 million tons on an annual basis. We're also helping our entrepreneurs to expand globally, and the GCC region is one of their favorite destinations. And this has a lot to do with the region's commitment to green energy transition, and especially here in Saudi Arabia under the Saudi 2030 vision. So based on these initiatives, we recently partnered with the Sovereign Wealth Fund in the region to set up a mega factory to produce green energy equipment, bringing our expertise and know-how and create local jobs. And in fact, after the last FII, one of our portfolio companies announced a partnership with one of PIF's subsidiaries. This is a perfect example of the FII's vision of breaking boundaries and fostering global cooperation. So I think by investing in the region, in the GCC region, we're not only supporting our entrepreneurs' growth, we're also demonstrating that innovation can really bring shared prosperity. Back to you.
Thank you, May. Appreciate that. Jun, welcome.
Thank you.
You're from South Korea, but you have chosen a number of years ago to actually work for a legendary company called Legend, no puns intended, in China. So let me ask you a fairly Chinese question here, given your background. As May and Bonnie both have mentioned, China has really become a powerhouse for advanced manufacturing, but at the same time also a major concern as perceived by the rest of the world as a source of global overcapacity. How do you think this will evolve?
Hello, everyone. My name is Chun Song Park from South Korea. I've been working for Chinese venture capital for the last 20 years. I think there's a lot of debate about overcapacity, also the tech war between US and China. So our strategy is to find a company that can replicate its success model outside of their home market. So we've been investing in Korea. We've invested 18 companies. We have 3 companies in Japan. And in Korea, for example, we invested a very popular boy band group called BTS. We invested that Asian group. Also, we invested in virtual YouTuber company in Japan called Anycolor, which is one of the most successful IPO in Japan 2 years ago. What I want to emphasize is we want to find a company in each region that can scale their business outside of their home market. And back to your question, when it comes to China, I think China is very unique in the sense that they have a huge engineer talent. So every year they have more than 2 million engineer talents graduating every year. Also, the government and the companies are very committed to make a lot of expenditure in R&D. So we invested EV battery company called CATL back in 2016. When we invested, Panasonic from Japan was actually dominating the market. But fast forward 8 years from now, CATL is now taking about 35% of the total market share, followed by BYD. So what I want to emphasize is China is really good at manufacturing and also bringing all these nurturing AI talents. So although there's an overcapacity issue, I think in terms of competitive edge, China is none to second, I think, in the world. So I'm pretty confident that there's a lot of investment opportunities when it comes to these advanced technology sectors.
Thank you, Jun. Andrew, let's move over to you. First of all, thank you for being on the panel and making me feel like a senior citizen. I appreciate that. Let me ask you about Jun's point of view. Do you agree with him? As you know, for years, China's integration into global trade really fueled up to a third of the global economic growth, really benefiting the entire world from a demand perspective. Do you think this will change, and why do you think so?
Thank you, Rick. It's an honor to be here. Generally, I agree with June. I think we all, as we know, globalization and technology are the two fundamental forces to drive economic growth for the entire world. In which sense, I believe China will continue to contribute. Firstly, for globalization, many would think would misread a few signals in recent years to conclude that China is probably closing up its economy or prioritizing national security over economic growth. But when actually, indeed, it is the opposite. If we carefully read the 22,000-word report of the third plenary session of CPC, 20th CPC Central Conference Committee, which is considered the most important policy document in every 5 years for reforms and economic policy making, you will find that the length of discussing economic issues takes up over 40% this time. In comparison, in the last equivalence 5 years ago, it was only 10%. And you will see a lot of positive words got frequently mentioned in comparison to the last equivalence. So I'm trying to say that, and also astonishingly, the chapter that was supposed to address the Taiwan issue in the last equivalence got entirely eliminated this time to make room for the economic issues, which is meant to send out a big signal that to the world that China is still prioritizing economic high-quality development, as Bonnie said, over all else above. So that's very essential signal. And as for consequentially, we see a lot of this year. We've been seeing a lot of policy movements to further open up the economy for international investors, corporates, or even travelers this year. And of course, since the late September, we see massive fiscal and monetary measures to stimulate the economy and capital market. So, and as for the technology front, let me just please allow me to quickly show you a few very interesting numbers. First, as June mentioned, with people retiring and kids graduating from college every year, there are over 10 million people with college degrees in China every year entering the labor market, 35% of which hold degrees from STEM majors, which definitely translates into, and this will keep happening for the next 10 years, which definitely will translate into more affordable human capitals for engineers and R&D personnel. And this phenomenon is unprecedented in the human history. Second of all, the second is there are 27% of the academic papers published by top journals in science and technology around the world are from actually from mainland China, and there are 48% of patents granted by the top 5 patent IP offices around the world are from mainland China.
Yeah, Andrew, thank you for those statistics. We have to get.
Oh, right.
So
Yes.
really quick for another round of questions here. Bonnie, moving to the world at large, I know we think about this every day, running Asia's second largest stock exchange. The geopolitical landscape is increasingly complex and difficult. How can business and finance and investing leaders here contribute to a future of shared prosperity rather than fragmentation and distrust, you think?
Well, that's a difficult question, but at least I think we should focus on something that we can agree on. I think these days it's not easy. There is more disagreement in the world than agreement. But like I said earlier, perhaps we share one planet. So green transitioning and things that we can do to foster that could be one thing that we should all prioritize, and hopefully we make progress together. So that would be my answer.
Oh, I will vote for you on that one. May, back on China, the recent policy moves has sparked curiosity among a lot of people here about a potentially significant fiscal stimulus. However, others suggest that China's already very high level of leverage may actually constrain its capacity to borrow further, actually do this. What is your view on this?
That's a great question, and it really cuts to the heart of the debate. If you look at Chinese government, that local and central government together is around 70% of GDP. But if you add on the local government financing vehicle, that goes to 130%, which is comparable to lots of the advanced economy. But there is another side of the story because the Chinese government does have lots of assets. According to a working paper by the IMF said that Chinese government's holding in equity alone is worth 12.5 trillion US dollars, about 68% of the GDP. In fact, in the same paper, IMF mentioned that the Chinese government's net worth, that's asset minus liabilities, is about 7% of GDP in 2019, and that's a pretty good position to be in. And China is also in a unique situation of being the creditor to the world and having a relatively enclosed system. So that gives the government lots of flexibilities because whatever financing they need to implement new initiatives, those capitals are available domestically. So you can see from the very low interest rates of the Chinese government that there are ample of liquidities for the Chinese government to implement its policies.
Thank you. Really quick, June, is China investable?
Yeah, especially when it comes to AI or manufacturing-related sectors, I think there's still a great investment opportunity. We actually invested in China's OpenAI called Zhipu. They recently raised $400 million from Prosperity 7 here in Middle East as well. I think that's really a good example of how China can excel in these AI sectors. So there's not many foundation models in other Asian countries, and China alone has more than 100. There are already 6 unicorn companies in foundation model. That clearly shows China has an edge over these engineer or concentrated sectors like AI.
Thank you. To wrap it up, Nicholas, back to you. Even though this panel appears rosier than most about China, as you know, there's a lot of skepticisms around the world about China. Part of that seemed to be a lack of ability for Beijing to communicate very well about China's intentions and initiatives. Any general advice? 1 minute.
Well, I think getting the message out is tough for any government, in all honesty. We experienced that ourselves in Hong Kong. But Hong Kong is unique within China because we're the most international city. So I do believe that Hong Kong can play a critical role as a platform or as a super highway, if you will, to ensure that these quality investment opportunities within mainland of China can go through Hong Kong. And I'll give you one figure. Over 50% of China's FDI outflow and inflow passes through Hong Kong or into Hong Kong. So that already proves that we have an important mission in our hand.
Thank you. Ladies and gentlemen, please give our great minds on China and the world a big hand.